Good morning, everyone, and welcome to this next webinar in the Sybiz Masterclass series. This particular one is going to be talking about general ledger consolidation, so we'll get straight into it. And in terms of what we'll cover today, the general ledger consolidation process is what this is all about. So we've structured the presentation so that we will commence with an overview. Then we'll get into a little bit of a demonstration and then a deeper dive that will talk a little bit more about the setup requirements and things along those lines. So if it is something that you like the looks of and you're looking to get onto it pretty much straight away, then hang around for the deeper dive. But conversely, if it is something where you're interested, but perhaps not going to be looking at setting it up for a little while yet, just be aware that the deeper dive is there, so you can go back to the recording at any time in the future and have a bit more of a look at the process of setting up and getting ready for your consolidated reporting. Now, this is a new module that is been released in version 24.10, which is now live, so it is available to Sybiz customers. And I guess it's fairly timely, particularly for our Australian customers coming up to end of financial year. This is, I guess, the time where you will be looking to do that consolidated reporting. And as I mentioned, it is a separate module, but it is included with the business pack licenses. So something to talk to your business partners about if you'd like some more information along those lines. So let's keep on going. So consolidated reporting, what is that all about? And I guess just a simple definition is it's the ability to produce key financial reports that consolidate the performance of related entities. So rather than having to export all this stuff out into Excel and manipulate it and consolidate it manually, and then we all know that if you do that manually, then if there is some adjustments required, you need to go back to the drawing board and do that whole process again. This makes light work of that process. Once you invest the time in getting it configured and set up, it is very quick and easy to update your data and reproduce those financial reports. And I guess in terms of who it's for, obviously, if you've only got a single entity within your organisation or your group, then yeah, there's nothing to consolidate, so it's not really relevant to you. But anyone that does have multiple entities within their group, this is for you. And one of the things that we were able to do in this first release is to cater for different base currencies. So that means different jurisdictions, and also as a result of that, financial years don't have to be the same. So different countries around the world will have different end of financial years. Most companies across the planet have the calendar year financial year, but obviously with places like Australia being end of June, New Zealand end of March, etc., it does vary around the world. So that doesn't matter if you have different jurisdictions within your group, you are still able to consolidate. And there's also no need to have a common chart of accounts. So if each of these entities have been running with their own set of accounts and there's no commonality, then that doesn't matter. The process and the design that we've used for this consolidation process takes all that into consideration and gives you options to deal with that kind of scenario, which we'll obviously talk about in more detail. And just a couple of the concepts: that the databases are mapped to a parent chart of accounts. So we'll take you through that process. And the mapping is unconstrained. So what that means is that you can have a liability account in one of the subsidiary chart of accounts that actually maps to an asset of the parent. And so that you can cross those bounds in terms of the type of account as you push the information up through the consolidated reporting. So that will make sense to those people that do have things like intercompany loans and even say management fees that are an expense to one company and income to another company and things of that nature. So that's what we mean by the unconstrained chart of accounts there. And just some of the key concepts: you need to create a consolidation database, and that's also known as the parent database. So even if you have a parent company database, which most of you will, that's still going to be separate and still part of the consolidation process. So you have a separate consolidation database that the parent company will also feed into. So the individual databases, so this is your subsidiaries, but also your parent in the consolidation context, they need to be authorized. So it's a little bit counterintuitive, but what we're catering for here is that if you do have a group of companies and there's some separation where certain users aren't allowed to go into certain companies, then by having this security structure here, that caters for that. So you don't get to a situation where, say, someone creates a consolidated company database and then starts fetching transactions from databases that they're otherwise not allowed to interact with. So the authorization is done at the child database level purely to cater for that security. And as mentioned, the parent database has its own chart of accounts, and there's 2 special accounts that must be defined in the defaults, which we'll talk about in a bit more information in a moment as well. And essentially the process from there is the child database chart of accounts is mapped to the parent chart of accounts, and you do have the ability, as mentioned, because you don't have that constraint where an asset account in a child database must be an asset in the consolidated database. You can cross over those bounds if it's better reported as a liability at the consolidation level, and so that allows you to eliminate those things like intercompany loans, etc. Another one of the concepts to explain is we have a binge and purge approach to the transaction imports. And one of the reasons for this is because you can have entities with different base currencies and therefore exchange rates. And so if you want to sort of redo the consolidation at a different exchange rate, then rather than have to go back and adjust all these existing transactions, what we do, we throw the baby out with the bathwater, get rid of all of the transactions, and then bring them all in again afresh. So that also helps where if you did, say, do some back posting or something like that, rather than the consolidation having to keep track of all of these transactions and say, hang on, this is a transaction that's maybe been back posted 3 years ago because the auditors have said so. We don't have to worry about that because of the approach that we're taking. We just flush the system out and then bring the transactions back through again, which we'll cover in the demonstration a little bit later on. And you do have the ability to perform journals in the consolidation company. One of the reasons for that is you might have a situation where, say, perhaps one of the child companies, they weren't mapped properly, so something that should have been perhaps coded to an asset account to do that elimination for an intercompany loan. Someone may have neglected to do that. You may not have access to that database, but you still want to sort of get your draft consolidated reports. So in the interim, you can just do a journal to cater for that movement of that entry from the child database that has not gone to the right account. And another reason for the journals is that when you do have multiple currencies consolidated, there are potentially some minor rounding issues, and the journal just gives you the ability, if you do want to sort of move the amounts from that default account, you can decide where to journal that to for your consolidated reporting purposes. And the other concept just to talk about as well is that the consolidation company has a really simplified user interface. There's hardly any buttons at all compared to a normal vision company, so it is very distinguishable, and because of its nature as well, being a general ledger consolidation, the only reports that you'll see is just a subset of the general ledger reports. So there's some of the key concepts, and I guess just the 2 key points there is that there is a little bit of back and forward as you initially set up your consolidation, and the other key concept is that binge and purge, that we flush all the data out and then bring it back in again when you redo the consolidation. From a process overview point of view, you create the parent database, the consolidation database, in other words. And again, we're going to go into a bit of a deeper dive, but this is just to give you the overview. You then create a chart of accounts in that parent database, and that has absolutely no bearing on, it doesn't have to be related at all to the chart of accounts in any of the databases that you're consolidating. It could be as simplified or as detailed as you want it to be. And you just have that flexibility there. generally speaking, with a consolidated database, you are going to be having a more simplified and streamlined chart of accounts because it is more summary-based reporting. But having said that, if you wanted to have a one-to-one relationship between your consolidation accounts and your subsidiary accounts, you can do that as well. You do need to nominate some default accounts for the suspense and rounding. The suspense we'll talk about in a moment. And then, as I said, you need to go back into the children database or the child databases and authorize them to the consolidation account. So you need to essentially say that, hey, I'm happy for this database to be subject to the transaction import to the consolidation database. Then once that process has been done at each of the child databases, you then go back into the consolidation database and attach the companies. And then the next step is for each of the child databases, you need to map the chart of accounts from the parent database. So there's a process there to export to publish the chart of accounts from the consolidation company to each of the child databases. That happens automatically and it spits it out to all of the child databases all at the same time. So it's a fairly streamlined process. And then we recommend to use the spreadsheet export import process in the child databases to attribute the consolidation accounts to each of the general ledger accounts in those child databases. Then the next two steps are pretty easy. It's just to fetch the transactions in the parent database and then report away till your heart's content. And the good news is that steps 1 through 6 are only required for the initial process. Now, we probably should have a little asterisk there because if you are operating entities that have fairly dynamic chart of accounts, like you're adding new accounts on a regular basis, then obviously as those accounts are added, you will need to now be mindful of attributing a consolidation account mapping to them as well. And similarly, as you evolve your consolidated reporting, you might decide that you want a bit of finer grained reporting. So you might introduce some new accounts into the consolidated company's chart of accounts. And it's just the process of exporting those accounts to the child databases again. But in the event that you have a static chart of accounts and you're happy with your initial setup, then it's really only processes or steps 7 and 8 that you repeat on a, say, annual basis or quarterly basis or whatever frequency you're going to be doing your consolidated reporting. Okay, so we'll get into a demonstration in just a moment. So what we've decided to do is just mimic a subset of the Sybiz group of companies. So a few of the companies in the group are based in different countries. So we have an Australian parent company, and then we've got trading companies in Australia, New Zealand and Ireland, and we're just using those ones as an example because they have different currencies and also different end of financial years. And they also have totally different chart of accounts, and some of them have got even more segments than others. And there's also intercompany transactions between those entities. So the actual dollar figures and even some of the nature of the balances being debits where they should be credits, they're just totally zany figures that we're going to be showing just to sort of let you know that we're not using live data. It's just demonstration data. So I'm just going to go into my consolidated company, and a little bit of a cooking show. I'm not going to take you through the actual process of getting set up. We will talk about that in our deep dive, but so here's one that we've prepared a little bit earlier. So I have my consolidated chart of accounts. What I've decided to do from my segment perspective is I've decided to have a fairly simplified chart of accounts where I'm going to have my accounts, and then I'm going to have an additional segment to let me know which company and also which jurisdiction the actual entries have come from. So this gives me the flexibility. By doing this, I can say, okay, I want to actually see how I've gone, say, Northern Hemisphere versus Southern Hemisphere, so I can run a profit and loss. That just includes Australia and New Zealand. And then I can run one for Ireland separately. And then, of course, I can run them all together. So that's just I guess one of many examples as to what you can do in terms of your consolidated account setup. And then the accounts themselves that we have are just a 4-digit single segment plus the segment determining which country they come from. And the other thing, just to show you while we're here as well, you've obviously noticed the simplified user interface, but we do need to set the default accounts for the unassigned suspense account. So just a little bit more about that. That is just if you do have that situation where perhaps a new account has been added to one of the subsidiary companies, but it hasn't been mapped to a consolidation account. We've decided that we're not going to say, okay, computer says no, you've got to go and call the person, perhaps they're in a different country, and get them to map that database to the consolidated account. That might not be possible 24/7. So this just allows you to say, okay, we're going to take those transactions that are not otherwise directed into a consolidation account, and we're going to put them into this suspense account, and then we can use journals to deal with that. So of course you do have that flexibility to get on the phone and call the company in New Zealand and say, hey, can you assign your consolidation accounts to those new accounts that you've created? Yeah, so you do have that option, but just in case that option is not available to you, then you do also have that ability to do journals from the unassigned suspense account. And the rounding account, that also needs to be specified. You might think, okay, well, I don't actually have any foreign subsidiary companies or different base currencies in the companies that I look after. And that may be true today, but there's no harm in just sort of quickly setting up this account. And then if you do acquire a foreign company down the track, then at least this bit's already done. Yeah, I guess the important point here is that you won't actually be able to do the consolidation process or import transactions until these default accounts have been assigned. Okay, so yeah, what we talked about before was the simplified user interface. So we have the ability to export the accounts, which I'll just show you that process there. So this will then push through to my 3 subsidiary companies, the chart of accounts. So if I have made an adjustment, if I've added new accounts, it's as simple as that, just to sort of push it out to the individual companies. And yeah, you can add your companies through here, through the consolidation company. So once they've been authorized at the individual database level, they will become available for you to consolidate and add to this list. And once they're in the list, you can, and once you've gone into each of those child companies, I might just show you one example here, nice and green for Ireland. If we say go into, let's just say the ARB account, my bank account here, then I've just got this mapped to a current asset consolidation account. But if I wanted to get more fine grain, I can actually say, okay, well, I've just added in my bank accounts consolidation account, so I'm going to reassign that to my bank accounts Ireland. And then obviously, if you are going to be making minor adjustments like that, by all means do it through the user interface, edit the account. But if you are going to be doing something more substantial, then what you're going to be wanting to do is use your data utilities here. So and also in the individual companies doing your export and import to update your chart of accounts. And yeah, so we'll just take you through the import transactions. And what you'll see through this process is firstly, we have the prompt on the exchange rates. So the beauty of the structure that we've got in terms of this setup is if you say use the wrong exchange rate here and you want to sort of do it again, it's very easy just to come in and go back through this process. And you'll see it's removing the old transaction. So as I said, that binge and purge, where it purges everything that was there previously and then sucks in the information from those subsidiary accounts. And it's ready for us to start reporting again. So the reports, as I said, there's not many there. There's not many that are relevant to consolidated reporting. So I'll just run, for example, the profit and loss comparative statement. And we'll just give that a quick run. And so this is just the same report as you get in your normal databases. And I've got this nice and summarized. So I can still see each of the individual jurisdictions there, because I have decided that that's the way I want to set up my consolidation database. But if I want to sort of rerun that report at just summary level, I can change the zoom level to account and just rerun the report, and it's a lot more summarized now. So I do have that flexibility because of the way I have set up my consolidation company chart of accounts. And that's down to your personal preference. Theoretically, it is possible to maintain multiple consolidation companies if you wanted to have different types of charts of accounts, but that will take a little bit more maintenance in terms of mapping your chart of accounts in your child databases. So I guess, yeah, that is really the simplistic overview there. You have some of the dashboards as well, so statement of financial position, and you've got the analytics as well to play with from a reporting perspective, and custom reports. So there's a few different options there in the actual consolidated company. So with that, that's just a really brief demonstration. So we'll just flick back to the slides now. And as I said in the intro, some of you may wish to sort of disappear at this point in time and come back to the deeper dive later when you are ready to set it up in your own environments. So on that basis, we'll just check in to see if there's any questions, just in case people do need to disappear. And we've got a few questions there. Okay, someone's just asking, they've got one of their 4 companies in their group uses a different accounting system. How dare they? And wants to know whether that can also be consolidated. Yeah, I guess a couple answers to that is that we do have a generic conversion in Vision as well. So it is, particularly if you are just looking at doing a general ledger conversion, the generic conversion is a good tool to get data out of another system into Vision. So that would be one way, because you do need to have, each of the child databases does need to be a Sybiz Vision database. So that's one way to do it. And of course, obviously, move that company across to Vision is another option. But I guess, yeah, the key point there is that the consolidation databases all need to be a Sybiz Vision database, and more particularly, they need to be all on the same version as well. Another question: can we use our existing parent company database as the consolidation company? Okay, so yeah, I guess, yeah, you've got a say a holding company or whatever, and that's the ultimate parent company. The short answer is no. It's a little counterintuitive, but your parent company in that sense would become a child of the consolidation company database. So you'd still need a consolidation company over the top to consolidate into. Yeah, I guess one, like when we were considering the design, generally speaking, your consolidation company is going to have a much more simplified chart of accounts. Your parent company, ultimate parent company, may have a very complex chart of accounts, and it may not sort of be all that friendly in terms of mapping some of the subsidiaries into. So having a separate consolidation company just gives you that flexibility, yeah, it just keeps, I guess, superfluous data out of a live company database as well. So there's a couple other questions, but we might get to them a little bit later. And now on with the show, into the deeper dive. Okay, so as I said, we're going to be jumping into a bit more detail just to sort of walk you through the process, to give you an overview of what's required. So just taking what we talked about in summary form a little bit deeper. And so just before we do that, just a couple of those key concepts just to remind you of. Because of the security constructs and considerations, of course, if you're in a situation where everybody's got access to all of the databases, then this is a little bit of overkill, but we need to cater for that situation where different people perhaps don't have rights to different databases, and therefore we need the security to be mindful of that. And there's the authorization required at each of the child database level to let the consolidation company know that they're open for business. Those defaults we've talked about, and we've, as I said, we were mindful of that situation where you might be doing a consolidation and you realise that someone hasn't mapped a new account to the consolidation account. We don't want to stop you if you can't get hold of someone to fix that up. So it gives you that ability to continue with that consolidation process and use journals to adjust in those circumstances. And then there is also that default account for the rounding caused by currency conversion. You might get lucky and there's nothing that goes there at all, but in reality, you might get a few cents going here, there, and everywhere from those foreign currency rounding perspectives. Obviously, if you use a a fairly well-rounded exchange rate, you're going to be less likely to receive the consolidation rounding there. But if you do use more precision in your exchange rate and say go to 4, 5, 6 decimal places, then you are going to open yourself up to potentially more rounding there. And the other point to again emphasize is just that your subsequent transaction import that deletes the previous data first. So that does make it fairly easy if you are doing those things like backposting or making adjustments to your chart of accounts, and by getting rid of what's already there, it just gives you that flexibility to wipe the slate clean and not have to be mindful. I guess selfish from our point of view as well. We don't need to be mindful that you may have done some backposting or added new accounts and all of that sort of jazz. It just makes life a lot easier there. So when you start the process, you'll be wanting to create a consolidation database, and so it's not something you do every day in terms of creating a company. So just part of the UI there is in your company selection, you do a right click and you have the create company. It's just the normal create company button. So at this point, it's no different. But as you go into the consolidation database setup process, there is a little switch that you need to switch on, which is a new switch, which is the consolidation company. So that lets the system know that this is the specialized type of company that you're going to be creating. And so that's just something to keep an eye out for. If you want, you can also hit the F1 key as you walk through that process. The context sensitive help will give you more detail on that as well. Once you've created your new company for the consolidation purposes, you then need to set about creating your segments and your accounts. And yeah, give this a little bit of thought. So don't do this on the fly. Think about what structure you want, what level of detail you want, how many segments you want, and what they're all about prior to actually creating your chart of accounts. It's much easier to sort of plan this once and get it right rather than wing it or do it on the fly. And you have the ability to import segments, or you can manually create them depending on the depths that you're going to. So in my example, I've essentially just created one account per account type. So that is a fairly easy thing to do manually. But yeah, if you're going to have lots of segments and lots of accounts, then you're going to be wanting to use the import rather than do that manually. And when you create your accounts as well, you can use the wizard, which we'll show you on some screenshots. And also, because we're not doing banking transactions within the consolidation company, we can do journals, but not bank transfers and things of that nature, because it just doesn't make sense at this consolidated reporting level. Then the various sort of bank account types, they're not relevant. So you just basically create accounts in your current asset or liability in the case of overdraft to map those bank accounts to. And there is only one profit brought forward account in the consolidated database. So that's just something to be mindful of if you are going to be doing separate reporting. So in my context, if I wanted to say just do a balance sheet for the data that's come from the Australian child company, then that's going to be a little bit skew-if, and it's because I'm having a single profits brought forward account, which yeah, you just need to be mindful of, generally speaking, if you are going to be doing what I've done in terms of having the segment introduced, so you can still do some reporting to see what's come from each individual company, then yeah, that's good from a trading perspective, profit and loss perspective, but it does have that limitation as far as the balance sheet is concerned, in that you only have one profits roll forward account. And then, yeah, as I said, think about the definition of your segments and your structure prior to actually getting in there and setting it up. And one point on this, as you're going through this process, once you've set up your account settings, just log out and back in. That just refreshes the system to let it know that that's now your structure. And so when you do set about creating your segments and accounts, it will do so based on the refresh data. As I said, you're probably going to want to import the segments. So it is just a matter of clicking the import button in the top right of the UI, and then saying that you want to do the segment import, and stepping through that import process. When you go to create your chart of accounts as well, use the wizard. In most cases, this is the better way to do it. So once you've created your segments, then and created your, or rather, and you're ready to create your accounts, then yeah, just come in and use the chart of accounts wizard to do that. It'll make the process a lot easier for you. You can also use the import if you like, but in most cases, when you're talking about consolidated reporting, your chart of accounts wizard is going to be the better place to go. We've talked about these consolidation default accounts as well, and again, just to emphasize what they're for, the unassigned suspense account, that's if you've added new accounts in the child databases, but they haven't been mapped to the parent chart of accounts yet. And the rounding account is for the multiple currency consolidation. The authorization of each child database, that is done in the company settings of the each company, where you nominate the consolidation company. So this doesn't mean your child database can do anything with that consolidation company. It's just basically letting the consolidation company know that here's where to send the export of the chart of accounts, and here's where to fetch the data from. So I guess just to emphasize that point, once this child database has been connected to the consolidated company, this child database has no access to any data within that consolidation company. It is simply a one-way street in terms of it gives the consolidated company the ability to fetch data, but not the other way around. And you go back into your consolidated company and go through the process of adding companies to the list that you want to consolidate. And this is something that can evolve over time. You can say, okay, well, we've actually, 2 years down the track, we've actually got rid of our New Zealand company. You can just get rid of it out of the list and only report on the companies that are still within your group. And the flip side of it as well, you may acquire a different company as you travel, and yeah, you can just add that in at any time, etc. So you've got that flexibility. Mapping the chart of accounts, that is just the matter of once you have set up your chart of accounts in your consolidation company, you just click on the export accounts button, which we had a look at before, and that just basically pushes that consolidation chart of accounts out into each of those child databases. And then once in those child databases, you then go through the process of assigning those consolidation accounts to each of the general ledger accounts. Just a word on that as well. It's not something you're going to want to do manually. You're going to be wanting to use the import. But then when you are doing your tweaking, perhaps you're adding a new account to one of the child databases, then that is where you'd be wanting to assign the consolidation account manually. Yeah, it could well be that you're wanting to get a bit of finer grain reporting as well, and you might be adding new accounts to your consolidation company and then just making small tweaks in each of the child databases. So it's up to you. You've got that flexibility to do your ad hoc maintenance on an individual account level, but any sort of bulky maintenance that you do, use the export import process for that. So this is just a example spreadsheet where I'm just spitting out the accounts from my child company, and then I just go through using Excel and put in my consolidation accounts using a pretty simple copy and paste and copy down process as well. So and then import that back in to the individual child companies. The next step is to import the transactions, and as we saw earlier, you do get prompted with the exchange rate. So this gives you the ability, you can use different exchange rates to see what it looks like as you do the consolidation, but more likely you'll have your own policies that dictate what the exchange rate is that should be used. The live rate is just there as a guide, but as I said, you'll likely have some time elapsing between the end of relevant financial years and when you get around to doing your consolidated reporting. So yeah, the exchange rates that you use as at the time that you wanted to do your consolidated reporting will be based on whatever policies you have in place. And yeah, as we saw earlier, you then go through that wizard process. Again, just to emphasize, it gets rid of all of the old transactions and brings every transaction in from afresh. So again, that's one of the key design concepts. And then, yeah, once you've done that process, and again, just to emphasize that if you have a static chart of accounts, then all you're really doing once you've done the setup is you're just importing transactions to update your transactions, and then you're just reporting. So all those other steps, you don't have to worry about redoing those. The exception is obviously if you're adding or removing companies to your consolidated reporting, and then if you are also deciding to make some tweaks to your chart of accounts at the consolidated company level, then you'll need to republish those accounts out to your child databases and then making those adjustments at that level. But as I said, if everything's static, you're not making any changes, you have the same chart of accounts and the same child companies, then it is just that process of re-importing the transactions and then redoing your reporting. So the reports available are obviously your trial balance, balance sheet, P&L, and your comparative P&L that we had to look at before, and then the chart of accounts is there. You may wish to export that to make it easy for those updating your child databases with the chart of accounts from the consolidated company. You've got your account analytic as well, your 3 general ledger dashboards, and of course you've got your custom reports and report sets available to you as part of that process. So with that, that is basically the masterclass for the general ledger consolidation, and we'll just give one more opportunity for some questions. And again, just before we go, just emphasizing that we do record this presentation. It'll be available to you afterwards, so it might be August before you get around to doing your consolidated reporting and getting set up for it, so a few months down the track. So you can come back to this recording to have that overview there. And just a few more questions that have come through. Sorry, we don't have time to get to all of them. So just one that a couple of people have asked is, does it take up a company database license? Yeah, I guess there, yeah, it does. Or does the consolidation company take up a company database license? Yes, it does. So the default Sybiz Vision license includes 5 companies, but say if you already have 5 companies in your group, but you want to do the consolidated reporting, then you will need to add an additional company license pack to your license for the consolidated reporting purposes. And then yeah, we've kind of covered this one already. If you're wanting to add new accounts to your consolidation company, what do you need to do after that? Yeah, it is just a matter of sort of republishing the accounts from your consolidation company to the child companies using the export accounts, and then assigning those consolidation company accounts to each of the relevant accounts within the child databases. So yeah, with that, we will leave you to the rest of your day. Thank you very much for coming along to this webinar. For those of you in Australia, we have our next webinar is the Australian end of financial year webinar, and that's coming up around the middle of next month, and there'll be some communication coming out about that. So again, thank you very much for watching, and have a great rest of the day. Thank you. Bye.